Alex and Delta Corp, they are stocks that will be reacting to negative news flow post-market close yesterday.
Richard Harris is now joining us. He's Chief Executive at Port Shelter Investment Management. Richard, good to have you with us here. Thank you very much. So will we see something from the Bank of Japan? I mean, the question would be moot because we'll get the decision in 30 minutes, but what the heck? What's your sense, Richard? You think we'll hear something big?
30 minutes. Yes, I mean, it looks as if it's been fairly well flagged that maybe the Japanese authorities have actually blinked and they are looking to tighten things a little bit. It's been a bit mystifying as to the route that they took. Of course, nobody wants to increase interest rates, but if everybody is doing it around the world, your currency is going to get hurt. And Japan has had almost a life cycle collapse in its currency over the past 12 months or so. So I think, yes, we are going to see a change of policy. We are going to see things come to fruition, I think, in terms of that. And it just fits in with what's happening in the rest of the world, which is that interest rates are going up.
Richard, you know, we're going to ask you to, after this interview, we're going to request you to just stay there, right there in front of the camera while we proceed with our program. And when we get the decision, you know, we can come back to you for a reaction.
You really
just, you know, so if they were to abandon this ultra-loose monetary policy, Richard, why is that important? Just explain to us, why is that important for global markets?
Well, I'm not so sure it's as important to global markets as it is to Japan. Obviously, Japan is very important, and it's been a real outlier. And we've found, obviously, with the UK, with Liz Truss, is that if you bring in economic policies that do seem irrational in the light of the environment, then you're going to get hurt for it. And I think that's what we really saw in Japan. Now, it does have some global implications. So, for instance, a weakening yen, and especially that much, probably gave a little bit of a lift to the US dollar when we had that real US dollar strength last year that now seems to be coming off the boil a little bit. So you do see these big moves actually having an impact on other markets as well. But I think the impact on Japan is largely domestic.
Richard, let me come in. I have the Bank of England statement that's come off. Bank of Japan, sorry. They've mentioned a couple of things out here. The bank will apply a negative interest rate of minus 0.1% to the policy rate balances in the current accounts held by financial institutions. So that's point number one. This is official release that's come out. And second is the bank will purchase the necessary amount of Japanese corporate bonds without setting an upper limit so that the 10-year G bonds will remain at around 0%. So these are the two highlights that have just come out. I'll try to fill you in with more. But what's your sense with with these two numbers, these two statements that have come out?
Well, rather than maybe increase interest rates, they are looking at putting liquidity into the market. You know, they obviously want banks that have reserves to lend it out. So that's going to provide some stimulus to the economy. And I think that we're almost seeing another QE here at a time that a lot of other countries are trying to sanitize their QE, but not doing a very good job at it. And I think one reason for the general slight lift in optimism we've seen in the early part of the year is people do think central banks are going to continue to keep liquidity quite high, even as interest rates go up. So it does look as if they're following the kind of path we were talking about a moment ago, but maybe in a slightly different way.
So what they have done is they've also maintained their policy balance rate. There's no change in that. That's at minus 0.1%. So they've also maintained their yield curve. So there's no change in that either.
I think that's the headline.
That is the headline, yeah. That the yield
there was
curve
no
has been
expectation that the policy rate will be changed, but there was expectation that the cap on yields, which is popularly known as YCC, yield curve control, that will be done away with because they shocked markets in December by increasing the cap. I mean, how much could the Japanese yen float higher? But they're not doing anything this one. So that's the headline. No change, basically. So we can sit back and relax
We
now.
can perhaps move on. And I think for our own viewer and our own markets, right, all of this remains on the sidelines. What's happening here in India is the fact that perhaps recession risks are receding. There is buying that we're seeing once again. FIs have come back into the market. Do you think the worst of the recessionary fears are now behind us? I mean, that's the big question for an Indian investor. What's your own sense?
Well, if we're looking globally, I think that there's certainly been a decline in the recessionary fears that we've actually seen. Whether it's a wise decline is difficult to say. I mean, obviously, we've got Japan making noises about liberalization. We've got the US. Are they going to increase rates more or not? We've got inflation coming down, which could have led to further recession. But further out there, we do have some stress within companies. We are seeing earnings come down, although some of them have been flagged already. We are seeing big firings from big companies in the US and around the world. And I know from anecdotal evidence that a lot of small companies are hurting too. So whereas the markets seem to be slightly more optimistic, I think, than elsewhere, I think Main Street, the actual economy itself is still showing signs of strain, and I'm not sure that's going to go away enough to reduce recession fears.
Okay, all right. Richard, before we let you go, view on India. In the recent past, we've been relative underperformers after a splendid 2022, but slow start to 2023. While the Chinese markets as well as the Hang Seng, well, both of them are running away in the last 45 days or so. What's your sense? China still a tactical play? And for a longer run, you prefer?
Well, it's not very sophisticated, but what comes up must come down. I mean, we're seeing the same in the US dollar. Had a very good year last year. Some of the air started to come out of it. I don't think there's necessarily anything different or fundamentally changed with the Indian economy. It's just the markets reacting to good move last year. And of course, if you do have, if you like, a competitive market, a competitive emerging market, at least in Western investor terms, doing well, then there will be more tension there. And of course, China coming out of COVID, it's difficult to imagine we're not going to see quite a significant pop in that market. It'll be tactical, it'll be for a period, but it probably will impact other emerging markets that would otherwise be seen as other investment destinations.
Okay. Richard, are you hearing anything on oil? I mean, the sort of typical sell side which covers oil, one is starting to hear general yearnings for higher prices, higher levels, or at least predictions.
Yes, I think they will talk their own. They are talking their own book, of course. I think the oil market's quite confused at the moment. On the one hand, we do have all the geopolitical issues, and we have China maybe coming back. On the other hand, I think we do have slowing economies around the place. Shale pumpers have been more active in the US with the higher oil prices, although they're taking a little bit of time to come back. So I think the supply and demand imbalance is quite volatile at the moment. My guess would be that, yes, I think the early 90s are quite feasible. I don't see it going up to 100. But then again, it all down to events, dear boy. And we may have some events, some unknown unknowns that come out that could push oil over the top again.
All right. We will let you go on that note, Richard. It's always a pleasure speaking with you. Thanks a lot for joining in. Let's slip into a quick break on that note. On the other side of the break, our list of top 10 stocks with our entire research team coming up in a bit. Stay tuned.